So welcome everyone to our panel on biodiversity and non-rainforest landscapes. I'm really excited to have you here and to have the panelists. We've got some quite remarkable people, but you know, we all say that when we're on a panel, don't we? We've got, well, I'll introduce them as we go into it. But I want to say just something about what we're doing here. We come, each of us, from very different worlds, agriculture, grasslands, finance, standards. This panel, we wanted to make a conversation between those different worlds. So we'll each talk about our own world, best practice in our own world, and where we see the future going in our own world. But we want to then explore what's possible when you bring these different worlds together. And before we start, we want to ask you a very personal question. Where will you put your money? If we're going to save nature, invest in biodiversity, fix the climate challenge, and so on, where will you put your money? Will you put it into forests? Will you put it into coral reefs, into mangroves, into agriculture, grasslands? Where will you put your money? Can you, we'd invite you to, just while we're getting going, put your thoughts in the chat box, and we'll review what the consensus is there. And of course, there won't be a consensus, but what the general trend is. I should introduce myself. I'm Paul Chatterton. I lead the Landscape Finance Lab, which is just spun out of the Global Conservation Organization, WWF. We're based in Vienna, but they have a team across the world. And our purpose is to help structure landscape programs and get investment into them. This panel is to look at how to get investment into things other than forests that will save biodiversity. Forestry takes the lion's share of investment, but there's a lot more that can be invested in. And we'll do deep dives into projects that are investing in agriculture, in coral reefs, in peatlands, mangroves. It's quite a lot of experience here to take us through those. We'll also be looking at why we need to be investing across the range of different habitats and sectors. And with Gold Standard, we'll be looking at how you bring these pieces together and so on. And I'm going to ask each of the panelists to start by talking about why they are doing what they're doing, why they work in the area they've committed themselves to, as well as explaining who they are, what their organization is, and what's happening in their world. First, let's have a look at the results from the chat box. Felicity, do you want to take us through the conclusions? How's it looking? Are we getting anyone putting their
We have one
contributions
response, I think. So maybe we should do that at the end when maybe more people have had a chance to respond to the question. Let's do it at the end.
Very good. All right. So the question is, where would you put your pensions to save biodiversity? And you can throw that in as you go along. Firstly, I'd like to introduce you to Willem Ferwerda from Commonland. I'll let each panelist introduce themselves. And the question is to Willem, why are you where you are? Why are you doing what you're doing? And what's the most exciting thing at the moment in your world for investing in biodiversity? Over to you, sir.
Well, thank you very much, Paul. Happy to be here. Yeah, just briefly, my background is in ecology, tropical ecology, and actually I moved from the business world because we have, at the beginning, I was part of a large, co-founded a large ecotourism company, tour operator worldwide. And I moved from that business world to conservation and to landscape restoration. It gave me much more purpose in my life, direction. Of course, I'm an expert in that field because it's part of my DNA, you could say. But I think that this is the future. And Commonland is designing and developing large-scale landscape restoration projects or integrated landscape management projects so that the risks of investors and grantees and governments will go down if they work within that landscape setting. And I think the most exciting thing that we have developed over the last few years is regenerative ag companies. And actually in 2018, we were able to list the first regenerative holistic landscape restoration company in Australia on the Australian small cap stock exchange. So that is exciting. So I see a world that is developing into that direction. And yeah, I will put my pension fund funding into these kind of things if you would ask me that question. Thanks.
And I know, Willem, that particular investment is doing quite well. The investors who put their money in are already getting, if they took it out now, would get 4 times what they put in. Is that correct?
Yes, that is correct. And of course, I mean, we need to, this is not only about financial returns. What we do is we bring inspirational returns, social returns, and natural returns together to create sustainable financial returns and bring down risks at a long period of time.
Wow, we'll come back to that one. That sounds really exciting. Let's go to Aaron. Aaron Adu is the Managing Director of Global Shea Alliance, which is investing in grasslands and grassland solutions in Africa. Aaron, why are you doing what you're doing, and what's the most exciting thing that's happening for you at the moment?
Thank you very much, Paul, and good afternoon from Accra, everybody. We are doing what we're doing because shea is an economic crop. Then the parkland where the shea trees grow also fixes about 1.5 million metric tons of CO2 every year. But there is a steep decline in the tree population that is changing the ecosystem and leading to several consequences like flooding and even conflict in part of West Africa. So the Global Shea Alliance launched the Action for Shea Parkland, an initiative to plant about 100 million trees, new trees, and preserve about 4 million hectares of existing parklands. So we don't want to only plant new trees, we want to prevent people from cutting down existing trees. Why would anyone do this? If we preserve the current landscape and we plant new trees, we preserve the biodiversity. And then the people who live in these communities, they are part of the very poor areas in Africa and then around the world. If we invest in that, we reverse some of the effect of climate change, we improve livelihoods, and then also we improve the livelihoods of the people, actually. So that's why I'm very excited to be working on restoring shea parklands and preserving part of the existing ones.
So Aaron, these are conservation areas as well as production areas, and communities are living inside these areas as well, 4 million hectares. Yes. Wow, that's solid. And how's the investment going? Are these making returns yet, or it's still too early to say?
It's very early. We launched this project last year, and we are beginning to implement them through public-private partnerships. So we have private companies that are co-investing. We have other donors like the Green Climate Fund, just made an investment through the government of Ghana. And a number of other organizations are also coming on board. What is in it for the private sector, especially those who do share, is to secure their supply and then preserve their supply chain okay? And also invest into the communities that they are sourcing the raw materials from, which gives them, assurance of continuous future supply of the raw material.
I think this is going to become a theme of our conversation, how to bring those different bits together, the business and the finance and the community. I'm going to go to Ivo Mulder, who heads the climate finance unit of the United Nations Environment Programme. Ivo, you're initiating quite a few programs like this, and you're investing in programs like those that Aaron and Willem are inspiring. What drives you? What inspires you at the moment? And what's the most exciting things that are happening in your world?
Yeah, thanks, Paul, and thanks also to the organizers for the kind invitation. So indeed, I lead the climate finance unit out of Geneva, a team of 20 people across the different locations. And what drives me is to try and create direct positive impact on nature, climate, and rural livelihoods by engaging with both banks, impact investors, and institutional investors. And as many of those who are on this conference know, that the financial sector has, at least say in the 80s and 90s, deflected the attention of seeing the environment as being part of their responsibility. That, of course, has changed. But a big part of it over the past, I would say, 1 or 2 decades has been about limiting the negative impacts of your financing through the World Bank performance, the IFC performance standards, AHS standards, etc. But as we're entering this climate emergency, this nature emergency, we need to change the way how the entire global economy is operating, and that means that money needs to be directed that measures the positive impact of nature, climate, and rural livelihoods, in addition to generating a financial return. And as such, as UNEP, what we often do is through training, capacity building, is building the case. But I thought it's going to be more enticing if we demonstrate some proof of concept that it is actually possible to do this. So we've partnered with Rabobank, with BNP Paribas, with impact investors like Engreen, to say under what conditions is it possible to finance rubber, palm oil, soy, and many other commodities that have actually direct positive impact by lengthening the duration of loan, by taking away some of the risk that investors simply are unwilling to take. And I'm happy to provide a few examples in the chat box as well. But that's driving me, is to actually see the real change by working with some of the leaders, and then see with also the audience who's here to see how can ambition levels be improved by consumer goods companies, by traders, and by finance institutions.
So where would you put your money at the moment?
I mean, I'm like, if you take the example of Rabobank, I mean, any of us is banking somewhere, checking account, to savings account, and most of that money is being invested in very safe assets. And what I would want my bank to do, or my pension fund to do, is to apply a 1.5-degree climate lens to any assets that they're managing on their balance sheet, and to adjust their balance sheet accordingly. And the same is true for the nature crisis. I would want any loan or investment to be scrutinized against what the negative impact is on nature, and to therefore see how to work with clients, whether corporate or rural clients or otherwise, to basically change that. I think that's the only way through which we can see meaningful change, and that means going beyond standard ESG investment portfolios that are hardly moving the needle in terms of the actual direction of capital.
Too right. So everyone, don't forget to put your thoughts about where you would invest your money in the chat box. Felicity, you've come from the world of finance. You've worked with the World Bank, I understand. So Felicity Spors is head of sustainable finance for Gold Standard. You've now taken on the task of trying to bring all of these different pieces together and get some very high standards to measure carbon, to measure biodiversity, and measure results generally. What's exciting you? Why did you shift across the Gold Standard for a start? And where do you see the most exciting projects at the moment?
It's a long story why I left, so I'll give you the short version, which is that we do not have time in terms of climate change and biodiversity to do things incrementally, and that means that everything we do has to count, which means building on what Ivo said, every investment has to contribute. And so we need to move from an avoidance of risk to a how am I contributing logic. And actually with that, it's actually quite positive, because from an investment perspective, I mean, from whether you're a corporate or individual, a gap, the 4.1 trillion sustainable development gap per year, is an investment opportunity. That's what I learned at the bank. A gap is an investment opportunity. So it comes with a feeling of also transitioning to the positive. And then you really want to be able, I like a standard because you identify who is doing what credibly, so you can then reward those who are delivering. And it's a very concrete field. I've had originally, I'm an engineer who went into finance, and now I'm in the standards. So it sort of brings these together. So that's why I'm there. What's exciting me is, I think, the recognition increasingly of a holistic approach, and gold standard is a holistic standard that requires not just contribution to climate, but also to at least 2 other sustainable development goals. And so we push the bar. And I think what's interesting is that as we bring our experience from carbon markets and measuring impact there to corporates who are interested in addressing and understanding what they can claim in a supply chain, and we're addressing the technical issues about attribution, how these are equally relevant to the investment community. And it's exciting me right now because I think many of these things are coming together. There's an increasing awareness of a need for a positive impact claim or positive impact measurement approach. And there's a need for corporates to take better responsibility. So there's an interest in putting their money there. And there's an interest from us as individuals. So this question at the beginning is relevant to all of us. What am I doing with my money? Every one of us who's on the call or here is an investor. And we forget that sometimes. So I think this is just a very exciting time. Gold Standard is exploring pilots. And today I can announce we will be one of the ICEAL standards who will be piloting and developing a certification program for nature-based solutions using their standard. And we are also moving forward with developing certification at the level of an aggregate. And then when I say an aggregate, that can be a fund portfolio. It could be a landscape. That's another way of aggregating. It could be an urban city plan, or it could be a sourcing approach where you look through a supply chain and you find out who are my sources of cotton, and how do I, you know, like if I'm in the textile industry and I'm sourcing cotton, then you know how do I make sure that group of people are delivering, and what incentives has a corporate is able to drive change. And I think people are prepared to have these conversations, and this is what's really exciting me and driving me to think about how to measure, and therefore how can we manage and how can we reward those who are delivering, so we can learn from that success and replicate. Thank you.
Yeah, no, thank you, Felicity. It's bringing those pieces together is not easy, because I mean, especially given that carbon is now driving investment. We're getting carbon investment into the world, but it's often just going into tree planting, and that tree planting is not necessarily the best for nature. Sometimes it replaces nature. So how do we do that investment in a way that benefits nature, that benefits communities, and benefits the climate at the same time? Ivo, you have your hand up.
I mean, I'm not necessarily against tree planting, Paul, but as long as there's strong safeguards, such as no displacement of rural communities, no negative impact on nature, so no timberland plantation on where you had a pristine rainforest before. I mean, I think it really needs to be boxed in well from the start to make sure that the proper environmental social safeguards are there. But as long as that clarity can be provided to corporates who are also on this virtual conference, I think it can really spur investments in nature-based solutions, in landscapes, etc. As long as those key basic criteria are being set, so that everybody knows what the rules of the game are.
Yeah, completely. No, I agree. I'm really for tree planting, but in the right place and in the right way. If you measure just for carbon, you'd plant big plantations. of one species to maximize the carbon value. But if you want to maximize for biodiversity, then you're looking for tigers and trees, and that's a very different sort of forest that you're planting. Willem, I'll go over to you. I think Felicity used the word holistic standards and bringing the pieces together. You're a strong advocate of the landscape approach. How does that bring things together, and what benefits do investors get from working at the landscape scale?
Yeah, thanks, Paul, and also seconding what Ivo said and Felicity here. I think if you look from a landscape scale, we would say as ecologists from an ecosystem approach, then you will incentivize the right things and you will do the right things. But that means that it's science-based, community sensitive. Of course, all these things need to be rightly placed. And what we have seen over the last few years and probably decades is that it is quite tough for different entities that come together. You have the finance industry, the business, the corporate industry, and local communities, as well as conservation organizations and restoration movements. They come together in a landscape with public service and governments, local governments. How to create a narrative that people understand what's going on, and how to make sure that this narrative is practical. So I think Felicity mentioned the word holistic. This is about holistic landscape development, or in other terms, integrated landscape management. For investors, this is very important because it will bring risks down at a certain moment, so that they can invest in the right, let's say, business activities within that landscape. And of course, carbon will definitely accelerate this if the carbon industry really takes off. But it should also be very clear to the local communities where their place is and how they can interact with all these developments. And that's why we came up with a framework which we have worked with over the last few years, and you're involved in it, Paul, which we have called 4 returns framework. So each landscape should deliver 4 returns. Inspirational returns as the door opener to bring the local communities up to speed and give them hope instead of despair, living in a degraded system, and then look into the new opportunities for creating jobs and security, while that is always connected to biodiversity restoration, whether that is forests or let's say turn monoculture degrading agricultural systems into regenerative, positive for biodiversity and positive for production on the long run systems, and trying to keep, let's say, the production within those large landscapes. We're talking about landscapes of 100,000 hectares and more into those landscapes as much as possible. And yeah, we can now see that this proof of concept and this narrative, as well as the monitoring system underneath it, that this is working, and we are promoting it more and more as the next level of reaching out to the many frameworks that are from at the top level up there, to connect it to the, let's say, the top down system of institutions, because this is much more bottom up, and somewhere in the middle we will end. That's and for investors, this is, I think, the moment where they can learn how ecology works for their investment. And
taking that landscape scale, completely. And with communities at the center and the stakeholders at the center, that's the first step, isn't it?
So we create landscape partnerships, and those landscape partnerships, we help them to develop new business cases, and that's what we did, for instance, in Australia or in other places like Spain. Later,
terrifying for most investors. Absolutely terrifying for most investors and business people, but you're getting returns with it. Aaron, you're doing a very large program, 4 million hectares. Community sounds like it's key to that. Can you explain a little bit about how you're working with communities and how the benefits are coming back to communities and nature in your program? And you're on mute.
Sorry about that. We mobilized resources from public and private sources, and then we develop what we call a collaboration, and then implementation on the field is done and led by the communities. What we require, what is a requirement is that in addition to all the things they would plant, they should plant shade trees, right? Because we are the shade industry. So we encourage communities. For example, if you get into Nigeria, northern part of Nigeria and the part of Niger State, we are doing what we call integrated farming system, where we have the community plant shade trees on a piece of degraded land, but then in between them, they intercrop all of the fruits, vegetables, and the food crops that they need. They do apiculture, and then we are even actually encourage them to raise other poultry or other things that they would need as a community. So we allow the communities to choose those things that sustain them on daily basis. And what we have seen in the past is that is a big incentive for them to protect the shade trees that we plant on the fields. And that also encourages them to preserve the other shade trees that are in the landscape. Other places that this strategy was not adopted, the trees that were already existing on the landscape, they cut it down to do charcoal and sell, and then they mine gold on the piece of land. And because these are savanna landscapes, as soon as the big rains come, it gets flooded, and then the communities become quite desperate. Then it leads into all other things. The benefit of this for the private sector, again, as I said, is securing the supply that they get, right? So their investment into the landscapes are both protecting and preserving the local community. Meanwhile, it is helping them secure their supply. And then overall, shade trees are, the dominant tree in the savanna landscape, and it fixes a lot of carbon, right? And so it contributes a lot to reducing the overall impact of climate change across Africa.
So planting those trees gives the communities access to another layer of finance, which is the carbon financing.
We are exploring that. I'll be talking to Felicity of Gold Standard. I think we've been talking about trying to contact them. We are exploring that. But we piloted last year. We piloted PAM last year. We are piloting this integrated farming model this year. We are now trying to understand how the carbon market works. We want to understand regulations across West Africa as to access to the carbon credit. For example, in Ghana, all of the carbon apparently in the tropical zone belongs to the government. They've committed it to a World Bank program. So, we don't want to plant trees and then the government will say, well, the carbon belongs to me. We are studying it, and then when we get the answers, yes, the resulting benefit from carbon sales will be reinvested in these communities to expand the level of impact.
But it's actually best if you build it on real commercial value for the communities and for the economy. I'll flip over to Ivo on that one, because Ivo, through your work, you're sparking a whole set of investment vehicles that invest in the sorts of projects that Aaron is running. And we've got a question from the audience. How do you make a shift from extractives driving economic growth in developing countries to investments in nature-based solutions? I think that's exactly where Aaron is shifting things. But how do you build instruments that invest in these things?
I think what Aaron was saying is interesting. Ultimately it comes down to incentives. So indeed, if your organization, Aaron, is working with all kinds of community groups who don't benefit from the tree planting and protection because the government owns the carbon, then there's no incentives for those communities to actually provide that positive public good. So the incentives between the government, local communities, and businesses need to be understood, and those incentives will shape how people behave. To answer your question, Paul, so when we have spoken with a number of DFIs and banks, they say that sustainable land and ocean use is something extremely difficult to finance, because they don't understand the underlying business models that are commercially viable, and as such, there's an intrinsic know almost embedded in every application that is coming. So I think at least in the interim, some of that risk will have to be taken away. If and when loans, for example, have a longer duration, when a business model isn't fully tested, or when the underlying beneficiary, say a smallholder, doesn't have a credit history, for example. So in some of these cases, you need a blended finance model to take some of the risk away, either for an impact investor, for a DFI, development finance institution, or for a commercial bank. But obviously then also with the long-term objective of saying, how can you reduce the amount of public money that is needed? Because otherwise it's a perpetual subsidy, of course. And I've provided some examples in the chat function for the audience to have a look at. So this is basically what we've been doing, is to basically get demonstration of proof of concept. Like, how do you build viable carbon models by impact investors? How do you build and finance clients, either corporate or rural clients, that are delivering positive impacts for nature, rural communities, and climate? Often through longer term loans coupled with technical assistance, and ideally, and I think this is also to your point, Paul, ideally also monetizing or bringing another source of revenue, whether it's related to carbon or other ecosystems, because the investment case for a farmer, for a producer, is often not strong enough at the moment. And the blended finance model is too small a carrot for many to really bite into it.
Yeah, that's it's a tough one, isn't it? But if you can make these things work, they will fly. I always go back to the model of the railways and how they developed in the 1840s. At the beginning of the 1840s, there was 26 kilometers of railways, and George Stephenson had a nice engine and a few things, but by the end of the 1840s into the 1850s, there was 10,000 kilometers of railways being built. The GDP of the UK had been raised in finance to make this happen. And they were inventing how to do tunnels and bridges and things like that. And what changed it was bringing together the engineers, the financiers, and the politicians, and creating the railway company, which is a standard thing now, but was totally new then. What do you think the nature-based solution investment company looks like that brings all of these pieces together?
I mean, I'll try to indirectly answer it, and then also feel free for other panelists to jump on. I mean, I think one challenge, if I were, say, a loan officer at a bank, or if I were say chief procurement at a consumer goods company, is anything that goes that is outside the ordinary is a headache issue, basically. Yeah. If you asked to change your sourcing strategy, if you are asked to go after clients to sell them long-term loans that you've never done before, that means that it takes longer, more difficult, will probably lead to fewer yeses, and therefore maybe you're not reaching your KPIs as a salesperson. You lose your job, or you don't get your bonus. So it comes to the individual incentives, and to see if and what model works from, say, the Landscape Finance Lab, from Commonland, from others. Building that track record is, I think, extremely important. What are the business models that work, and how can they be scaled? And I would almost advocate for like a central repository where any person who's on this virtual conference and any of the other similar virtual conferences is able to go to and say, like, well, I want to do it, but what are my peers doing, and how can I replicate that, basically?
And how do we keep it really simple? That's what gold standard is really.
Yeah, indeed. And just to as an intro to Felicity, indeed, having standardized metrics and criteria, like what is positive lending, what's positive investment, what's positive procurement with nature, climate, and community positive impact means, because you need to have those criteria boxed in for people to say, okay, all the projects are reviewed across a similar lens, basically.
Yeah. Felicity, not to put any pressure on gold standard, but I think what you're doing, bringing together carbon and biodiversity and ICL standards, certification standards, is gold. If you can bring that together in one impact credit, this will make life much simpler for the bankers and for the businesses and for the communities. But
I don't think we're going to have one impact credit, but I think there's scopes of work which are sector driven, and through that you can drive biodiversity, nature-based solutions across sectors, and you can drive gender across sectors, and you can drive adaptation with other SDGs to deliver resilience. And I think it's understanding that logic which helps you drive the individual assets. Now, the individual assets or the programs or the projects, that's how an investor sees it as an asset, need to be grouped together to get the scale, because most of us on this call will agree that high delivering sustainable development impacts are often, not always, but often associated with disaggregated initiatives. And so landscape is one way of bringing those to scale. I want to just go back one step, which is to Ivo's comment on blended finance, which Gold Standard is working on a blended finance vehicle called the Subnational Climate Finance Initiative, which is the second largest in the market. There are 160 blended finance vehicles in the world, according to Convergence. Of those, very few report openly and transparently their impact, because it's a new thing, right? So that's the problem for governments who invest in these new vehicles. They're rather shy of saying it didn't work as we expected. And so Gold Standard is working within this model in order to share knowledge, but still at the scale of $750 million US over 12 years for equity investments, with a TA of 28 million for support, making projects design better and bankable. We're only going to be able to invest in about 25 projects, but we are hoping to learn on the way. So what I'm saying is that it's still very small, because Ivo pointed to, what do investors want today? They want liquidity. They don't want to commit to 12 years. They want to commit to 12 years on paper, but have a quick exit strategy. We're not offering them that. They're not happy about that. They say that our investment ticket, so we're looking for projects of size 5 to 75 million, is too small to make it worth their while looking at something which is an innovative model, which leads to support what Ivo was saying, which is these are new kind of relationships. They're not used to working with a Gold Standard who's telling them that their project, which has a good rate of return, needs to do more on the impact. So we had an interesting discussion about a hotel, and Gold Standard has pushed them to think about providing the waste minimization for the entire island, trying to push the boundaries of project design for impact. And I think that kind of experience is very good, but it's also difficult. And the other thing that's difficult for investors, and it comes a bit to what you were saying, Willem, about managing the internal rate of return, it's a kind of aggregate, because you'll have some projects which they're okay in terms of impacts, but they're not amazing, but they deliver a great internal rate of return and they're familiar. And then you'll have some projects where you're going to push the investor to do something a bit more risky, but it has a great sustainable impact story. And by doing things in an aggregate, you're forcing the investor to hedge, and that hedging is something they're used to doing. And if you try and do it project by project, it's a much harder game. The problem is the transaction cost. If we're going to measure impact on every project, it's going to have a huge bill. So we're working to develop a certification for a portfolio or a big aggregation. And on the understanding, and we're in the process of delivering this as part of this work for this blended finance vehicle. So watch this space. And as I said, there will be impact metrics for biodiversity. I don't think there will be 1 ton, because it's like adaptation and resilience, it's place-based, and we need to be mindful of that. So there will be some complexity, but it should be simpler than it currently is, and we need to harmonize metrics. So Gold Standard is a small NGO that works in alliances with lots of others to try and harmonize this whole world of metrics and ESGs and SDGs and try and make sense of it.
The gold standard should have been around when George Stephenson invented the railways, because then you might have had one gauge everywhere instead of different sizes of railways in different countries and different states. It's really important what you're doing, and exciting that this experimentation in investment systems. Willem, how does this land back in the landscapes?
Yeah, of course, I'm very much aligned with what Felicity said, and this is also maybe a strange message, but also the finance industry need to transform. They need to think in 20, 30, 40, 50 years instead of 12 years or less.
Mhm.
And that's a tough message because we are talking ecology, but we know from an ecological point of view and landscape point of view that the risk will go down. I think there's a question about heavy weather events in the chat. You know, we all know that you can bring down the risk of the cost of insurance companies if you take into consideration not only infrastructure but green infrastructure based on landscape approaches. And yeah, our experiences is that as soon as you start talking with investors with a landscape approach and you are able to bring them on board on long-term TA or let's say to cover the long-term TA development cost and create local entities in those landscapes that drive processes of landscape change that is more inclusive ecosystem work, more regenerative ag instead of monocultures, more reforestation with the right species or fighting invasive species, all that stuff, then the costs of, let's say the risks for the products that will come out of those landscapes are going down over the years. And we see it already in 5 to 10 years that this is happening. Not only risks for diseases or water droughts or heavy weather events, but also the risk that polarization, and this is a social component, that polarization will go down because it unites people and bring people back in that landscape or keep them in the landscape to work on those new jobs and create new industries. We call that the regenerative industry that is now step by step popping up. So it is very much connected to each other, and yeah, I think that for investors, you know, the future, I see several blended funds that can have maybe 10 or 20 landscapes in each, you know, covering 10 or 20 landscapes, and of course you need like Ivo said, you need to have guarantees from DFIs or other entities to make sure that those private investors come on board. But we need urgently pilot these things at a large scale. Not 50 or 100 or 10 million here and there. I mean, our experiences so far is that we need €500,000 per year for 20 years only to drive let's say the landscape development process in that area, which is, if you look at our case in Spain, where we work on 1 million hectares, it's nothing compared to what you can get out of that system, or how you can bring down risks for fires, water, and that kind of events. So it is a new way of thinking that we need to bring in the finance industry, while we need to try to speak, of course, the language of the finance industry, and that's what we try to do. And there are lots of reports out there. And I think Gold Standard and especially UNEP FI is working on that, and many others. But we also ask the finance industry to understand what ecosystems are and how ecology works. And that is not tick off the box stuff. That is understanding what that ecology and biodiversity is the only life support system that we have on this planet. And every business and finance industry will go down if you don't take that into consideration.
Yep. And these landscape instruments, if they work, they allow governments to reduce a whole lot of costs, communities as well, and they create opportunities. It's like the railways were costly to put in the beginning, but the price of land around the railways exploded and the business opportunities exploded, and the economy, this is part of what drove the Industrial Revolution. So do we see a new industrial revolution coming based around these sorts of investments? Perhaps not. Perhaps I'm getting a bit overexcited about this, but let's make it really practical. Aaron, when you think about your landscape in Ghana, what do you see in 10, 20 years' time, if you're really hopeful about what might be possible?
So people in Ghana and then across West Africa have become aware of the importance of restoring the degraded landscapes. What I think most people have not become aware now is to move from a monoculture of specific one tree on a particular landscape to planting a variety of trees and other species on the different landscapes across West Africa. I think that the people here are now taking leadership to restore the landscapes, but they are doing it in a way that benefits them in their day-to-day needs, right? So they are not just planting, 2,000 acres of palm or 10,000 acres of cocoa or any of these. I'll speak specifically to the share landscape where I know more. People are not just planting only share trees. They are planting other economic trees. They are planting other native trees because they get some of their daily food, their daily food needs. They get medicine, and then it also improves the air quality and reduces things like erosion and then heat in the areas that they grow. So at the national level, you see government launching annual tree planting. You see community leaders, chiefs, banning the destruction of forests and parklands, and even putting in place fines. Some of them are banning the cutting down of trees to produce charcoal. And then you have small companies, even large companies, cooperating with these communities to plant trees, but then allowing the communities to include other food crops and vegetables and fruits that is beneficial for their daily survival. So for me, the future is that communities should lead this, corporate should join, but we should move from planting single trees, a monoculture tree, by allowing communities to include on these landscapes their daily food needs. That way, they will protect the investment, and then the investor can get his return.
And I mean, where you began, investing in leaders, investing in the next generation, investing in the institutions that hold these things is really critical, isn't it? When you start thinking, investments for 20, 30 years, it's a very different game to getting the money back quickly. It's,
that is a question that has not been answered for now. And even the problem with land tenure system, right? You have who plants and then who benefit from it, right? Especially the long-term, trees like shade tree, baobab trees, and those ones. That is why it is important to get the government and then the local communities involved to spell out how the land tenure system, how the land ownership works, for the future. We should not only work with the communities, we should also bring in the government who has the regulatory frameworks. I mean, the government can come up with laws anytime, okay, on how the land should be managed. They should be included in all of this restoration in order to avoid conflict, because one person will plant, another person will say, well, the land belongs to me. You are a visitor to this land, which leads into a lot of conflict. Both public and private and the community should be taken into consideration in this type of investment in order to get a needed result.
Yeah, thank you. So we're running out of time. There's some comments in the chat box about needing to raise the 750 million, and we hear figures of 2 trillion and so on. Ivo, is it about the money, or is it about the system that brings these pieces together? Where do you think the future is? Is there a magic bullet to change all of this, or where will you be putting your own personal money?
Ideally, by asking critical questions to my pension funds and my bank to make sure that, and by being very critical on how I invest my own assets. But to answer your question, I thought, Paul, that the answer was by using, say, an exclusive blended finance approach, or other colleagues are focusing indeed on monetizing carbon. I think it's all of the above, basically. And ultimately, money flows when the incentives are made correct. So the incentives that Aaron was talking about the government of Ghana providing incentives to communities to own the carbon and therefore be a beneficiary in say the protection and restoration of some of the landscapes. What is needed in my view is 3 or 4 different things. First of all, there is a lot of subsidies and trade tariffs that go against all of the things that we talk about, and there's a lot of vested interest that will try to keep that. The same has happened for fossil fuels, and so far we haven't made the change, even though everybody believes that it doesn't make any sense to invest 2 to 3 trillions in fossil fuel related subsidies. But for whatever reasons, that hasn't been reduced so far. But ag subsidies will not have to be stopped, but they will have to be reformed, first of all. Second, as I mentioned, we'll need to get good, clear standards and metrics by which consumer goods companies, banks, investors can say, well, how am I going to measure my positive impact? Clear KPIs, clear criteria, etc. And the third and fourth is governments through their ODA budgets are only making available 3% of their climate funding for nature-based solutions. The rest goes to transport and renewables. I mean, a lot of scientists have said 30% of the climate problem can be solved through MBS. I mean, then that relative share of climate funding needs to be increased, both in relative and absolute terms. And those businesses who are part of this this online conference need to raise their ambition level. How am I going to be part of the solution? What am I going to ask my executives, either the CFO or the CEO, to retain me as a talent and for us to be part of the solution? So those are the 4 things that are needed in my view. And then money will flow as and when those incentives have been set by consumers, by governments, and by the businesses who are willing to lead by example.
Lovely. So, and in many ways, it's the sort of conversations we're having here, isn't it? Each of us bringing our different worlds together into something that actually reinforces each other's worlds. And you know, what's been so exciting for me about this conversation is hearing from Aaron about a real project that's making a real difference for nature and people, from Willem about a similar sort of thing, in similar things in his world, and the landscape approach, which takes it to the next level, from you, who building financial instruments that can invest in these, and from Felicity, that's setting the standards and the guidance to make it simple. And that's the hardest, most complex part of it. I mean, we're all doing complicated things, but I think you know, that's our challenge. We all need to work together to get those approaches simple and to take our ego out of it. Willem, we've talked, so we together have helped, and with many others have helped to set up the 1,000 Landscapes initiative, which aims to bring people together who are dealing with these challenges. And we ask everyone to leave their ego at the door, leave their logo at the door, and think together about how we can create something bigger that's going to solve these problems. Because so often it's our institutional egos that get in the way of us bringing these things together. So what's your advice to the world? How do once you walk out of the Zoom room, how do we all leave our ego behind a little bit and connect so that we can get a little closer to this sort of integrated approach that we're all aiming at?
Well, you were asking me, Paul.
In 10 words or less.
Maybe what we did, talking about logos, I think what we did is we developed a framework together, and lots of organizations, and we decided not to put our logos onto it, but only the UN Decade on Ecosystem Restoration. And I think the next, let's say this century, as I see it, it will be the century of ecology. It will not be the century of tech or travel to Mars or whatever, or artificial intelligence. It will be ecology that will dominate our lives. That means we need to work together, because ecosystems is a web of life and of organisms working together. And I think we need to learn from how that works much more than that we have done, let's say, over the last 2,000, 3,000 years. So we are moving into a new evolutionary state. and that will, everyone needs to be involved. If not, we will face lots of troubles as human beings. Not for the planet. There's nothing wrong with the planet. That will go. And I'm hopeful. I'm very hopeful, to be honest, to change the narrative. I'm super excited because I can tell you, Paul, when I finished my study as an ecologist in the end of the 80s, I couldn't find a job. So I became an entrepreneur with other unemployed biologists, and we started a tourism company that was wonderful work. But ecologists were not taken seriously, not by the finance industry, not by business, not even by education. Can you see ecology in business school? It's not taken seriously. That's why I'm associated to a business school. I'm kind of screaming in the desert there. And I think that is the next level we need to work on together. It is ecology that brings economics and not vice versa.
It's the new post-industrial revolution, isn't it? It's that brings nature and industry and community together. So Felicity, how do we help you do your job to make it all simple?
Got a simple answer, which is prototype, measure, manage, and reward. So what I mean, so you've got a prototype. Yeah, you've got to prototype new things. What we've got today is not working. You've got to measure how you're doing, because if you're testing something, it might fail. You have to manage the outcomes of that, learn from it, and build it better and replicate what works. And you have to reward those who are delivering on real impact. That's
right.
It. Thanks.
Right. So we're doing the test cases. We're getting the measurement systems sorted out.
No, I think we're not doing the test cases. I think we are on this platform, but right. I think that the world is not fully engaged. So I think we've mentioned already or indicated the problems with expectations from the financial sector, with the size of the instruments, with the difficulty we all face to draw in that money, so that we're forced to rely on the monetization of carbon, which is the wrong instrument, because at least for trees, it's the services that this does, and that's what the landscape approach really captures. It's the full authority. So we're reliant on the one thing that we can monetize right now, and it's creating kind of perversities because we're not thinking holistically. And I think this is the platform like this is good, but we're kind of like-minded. And there's an article, if maybe you read it, in the FT, and there's a Fancy, who used to be the CEO of BlackRock, has written a long essay in Medium, which just shows you how far from convincing the financial sector to move from making money is just fine, leave it for the governments to tell us when we're doing something wrong. So we've still got a long way to go, I think, but this is a good start, and this platform is very, very encouraging.
Cool. And Ivo, do you see the asset managers changing, the ones with the big money, the BlackRocks?
I think they need to be challenged more. And to Willem's point, I mean, I've got a 2-year-old daughter, and what makes me wake up every morning is making sure that we don't live in a 3-degree world by the end of the century. That's just going to be an unlivable world. As Willem was saying, the world will live on with or without us as human species. But we need to make sure that the broken food system, the broken finance system is being corrected. And that means asking hard questions and radical change, basically.
Brilliant. I'm going to give the last word to Aaron. Wisdom from your world, sir. What's your advice to us all?
Well, there's a popular African proverb that says that if you want to go fast, go alone. If you want to go far, go together. We need collaboration. We need partnership. Not just the corporate, we need government, we need local communities, we need experts, we need everybody if we want to restore the landscapes and if we want to reverse the effect of climate change. Thank you.
Good. Well, I couldn't summarize it better than that. I'll leave it there. I want to thank every one of you for a really remarkable discussion. I want to thank every one of you in the audience for participating and for your comments. I see that you've chosen to invest in all sorts of biodiversity, peatlands and reefs and rainforests and agriculture. Let's work to get the investment across the whole range of biodiversity, not just forests, and let's see where we go in the future. It's an exciting post-industrial world coming very soon. Thank you, everyone. It's been a delight.